All right, you all, we are live and we are talking about the great housing reset. That's what Redfin quoted is their prediction for 2026 housing market. We're going to go over their current predictions for the housing market for next year. We're going to talk about what they predict mortgage rates are going to be, home prices, and just the overall market and housing market. Do they see a good market where prices are elevated, or a bad market where home prices fall off the cliff? So if you all enjoy this video, be sure to like, subscribe, comment down below. Um, I've been doing these lives, and today we're doing a live based off of the housing market and Redfin's predictions. So if you all are interested in learning more about home prices and why they are calling it the Great Housing Reset, stay tuned. So I'm going to share my screen with you all, and we're going to talk about this article from Redfin. So let me go over here, share the screen, boom, boom, and we are sharing. So right now, just going to put this right here. We are on Redfin's 2026 predictions. Welcome to the Great Housing Reset. That's what they're calling it. And so the Great Housing Reset will take shape in 2026. It won't be a quick price correction. It won't be a recession. Instead, the Great Housing Reset will be a years long period of gradual increase in home sales and normalization of prices as affordability gradually improves. It will start next year with income rising faster than home prices for a prolonged period of time for the first time since the Great Recession era. So, do you all understand what they're saying? Essentially, they see normalcy happening next year, right? Because over the past 5 years, we've been having chaos, right? Home prices been up, home prices been just exploding since the pandemic, since Fed started cutting rates, since money was pumped into the system. People were buying houses, and the housing market has been crazy since 2020. And so essentially what they're saying here is they're predicting that the market will eventually normalize, right? Where you have an equaling amount of buyers and sellers in a market. And then also, you're going to have more affordability, right? People's wages are going to increase at a better rate than home prices, right? And then they're going to talk about what happened in 2025, right? Because essentially in 2025, we had home prices actually slow down lower than the rate of inflation, right? So real growth actually declined slightly in 2025, right? While wages, they actually increase higher than the rate of inflation. So that's why they say wages will increase more than the rate of home prices. But even then, it's not like, wages are so much more higher, right? Wages are still relatively, low for the medium sell home price. But it's good that it's going to increase at a faster rate, but home prices are not going to drop, right? So let's read more about the prediction. So their prediction number one, mortgage rates will dip to low 6% range, one factor improving affordability. So they do see rates dropping to the low 6% because right now rates are essentially the low 6%. So that's where we are right now with mortgage rates. And then, so they see the mortgage rate will average 6.3% for the entire year, down from its 2025 average of 6.6. So 2025 averaged 6.6, and they predict 2026 to average 6.3. Right now, it's around 6.3. Let's just look at the mortgage rate today, and to see what Google tells us right now. So I see here it says 6.25 on this article, but Yahoo Finance is telling us, wow, according to Zillow, the average 30-year fixed rate is around is at 6%. Mortgage rates are at 6% right now, down 11 basis points. Now, granted, they are predicting that the Fed is going to drop later this month. And so that's pretty good because once you hit that 5%, I think that changes everything. So that's Yahoo Finance. Let's look at some other articles because, you know, some articles right here, it says 6.25, 30-year is at 6.25 according to bank rate. There's articles telling us that. What is CBS News is telling us at the moment? Um, just under mortgage rates. Okay, the average mortgage rate on a 30-year term is 5.99 right now, you all. As of December 4th, 2025. This is actually my first time checking this and it being in the fives. This is great news, actually. Um, And so this is their first prediction. They will average 6.3%. I think for me personally, if I would make a prediction, I predict mortgage rates will be even slightly lower than this average for the whole year. Because if right now we're under 6.3, we're averaging around 6, 6.1, maybe 6.2. And right now we read two articles saying 6% or 5.99. And then we're going to have some more Fed rate cuts, right? And we know that it doesn't have a direct impact on mortgage rates, but it can impact a lot. And then when the Fed chair is changed in July, I believe, of next year, that's going to lower rates even more. So I think they're good. I think they're in the right path, the right trend, but I see it being averaging a little bit lower. I think it's going to average for 2026 around 6.1%, 6%. So we'll see which one is closer for next year. Now, their next prediction: home buying affordability will improve as wages grow faster than prices. So they still expect home price to rise 1% year over year in 2026, right? So essentially a flat growth. Home buying will become more affordable, will grow slower than wages for a sustained period of time. Wages will grow faster. So here we have this chart. We have price growth at 6%, wage growth at 4% over here. And then 2025, we have wage growth at 4% and price growth at 2%. So you already saw that in 2025 where wage growth grew at a higher rate than home prices. Right, but look at these big jumps that you have in home prices, right? You don't really have those big jumps in wages, right? You have them in home prices, but not wages. And then slow demand has historically caused prices to fall. Yes, demand has gone down. And then we have that. Now, home sales will rise 3%. We predict that sales of existing homes will end 2026 up 3% from 2025, with sales in at an annualized rate of 4.2%. So they see, the amount is this quantity, right, at around 4.2%. So they see it rising in 2026 compared to 2025. And you see these historic lows starting in 2023. Pre-pandemic, I think we were averaging home sales were high, much even higher than these rates, I believe. I believe it was like closer to 8 or 9 million, which is crazy. And now we're averaging around 4%. I mean 4.2 million of 4.1 million across the board. And so I could see this happening. I don't necessarily know if it's going to be more or less. I think it might be slightly more because mortgage rates will go down. I do see that happening. So it may happen. Prediction 4: rents will rise as demand for apartments rises and supply falls. Demand for apartments will rise as supply falls in 2026, leading to rising rents in many metro areas. Nationwide, we expect rents to rise 2 to 3% year over year by the end of 2026, roughly the pace of inflation. So, real growth is pretty flat, right? Real growth is when it matches essentially inflation. And so that's what they see happening in 2026. And so I could see that happening as less and less people buy homes, they'll be looking to rent. And so that will increase demand, which will increase price, but they're not predicting a huge jump in rent. And I do believe that, getting assets, getting houses right now, especially to rent, is probably the best move for a lot of investors because of these reasons, because people are priced out of the market, and so they have to rent. And so rents will increase over time. So that's what they have predicted for rents. High housing costs will reshape households with more roommates and fewer babies. So, roughly 6% of Americans who struggle to afford housing as of mid 2025 moved in with their parents, and another 6% moved in with roommates. We expect those shares to increase next year. And so, that's essentially a trend. I do know of people that moved in with their parents just because of lifestyle. They're still single, they have no children. They're all like, why am I paying for this amount of rent or whatever? Might as well live with my parents, have some warm food. Um, and, especially people from other cultures, this is normalized, right? You don't leave the house essentially until you get married. And so, that happens, and you can save a lot of money. Now, prediction six, affordability crisis will unite policymakers across party lines. I do see that happening because you see recently, and I'm not big into politics, not trying to make this political, but you see the New York mayor met with President Trump, and it was extremely cordial between the two. I think maybe they probably have man crushes for each other a little bit because they're both passionate leaders, but also one topic that was right, that was central in their talks was affordability in New York, especially for New Yorkers buying homes, being able to rent at an affordable rate. And even Trump has talked about affordability more and more. And you see changes with tariffs happening, cutting back on some tariffs for some commodities to lower the price. And so that's bringing the two sides together. Which can affect the housing market, right? Utility costs, materials, things of that nature, right? Zoning changes, allowing more ADUs in certain areas. And so you can see that happening more and more in other states. So, prediction seven, more Americans will refi and remodel. We expect US mortgage refinance volume to increase more than 30% annually in 2020. That's a lot. Well, if I mean, they're predicting rates to be around 6.3 average. I see it. Let's say you bought your house in 23 or 24 when you got a rate close to 7%. If rates dip for you and you got good credit score to 5.75, yeah, I see that happening. That people can refinance, use some money if they have equity. They may not have equity. Um, Especially if they bought in the past year or two, and they didn't put a high down payment. So yeah, remodeling, refinancing. I do see refinancing. I don't know about renovating, but that could happen a little bit more. Prediction eight: New York City outskirts, Great Lakes regions will be hot. Zoom towns like Nashville and Austin will not. So I do see the Midwest and all these northeastern cities continuing to have good price appreciation. Um, in towns like Austin that used to be hot, just slowing down even more. And I do see that happening. I'm in the South, and I have seen prices drop here. I even still have a flip on the market that's not selling. It was under contract, and so hopefully I can sell that soon. I may have to take it off the market, wait for the holidays to be done, and then put it back on the market. But even I'm seeing this change happening in my market, and I'm in the South. But I'm not in Nashville. Prediction nine: climate migration will go hyper local. So as climate driven events like hurricanes, wildfires become more frequent and intense, climate will become more popular reason to move. But people won't necessarily make big moves like coastal Florida to the Midwest or anything like that. Instead, we expect some people living in especially vulnerable neighborhoods to move to less vulnerable parts of the same metro. For example, Los Angeles Redfin agents say some people plan to leave places like the hills surrounding Malibu or the Palisades in favor of flat coastal neighborhoods like Santa Monica and Long Beach. Makes sense. The NAR will let local MLS call the shots, sparking consolidation. So it's time consuming, confusing, and inconsistent for the NAR to write rules for 500 local MLS. NAR will step out of the role of industry rulemaker and let local branches create rules about how homes are listed in their market, something that has already started happening. NAR, for its part, will focus on advocacy. Okay, that makes sense. And I recently put a house on the MLS. I just used a flat fee broker, and I could have done it just myself, but it was a little confusing because they required this disclosure and that disclosure. They required this information about the lot size, the lot number, and so I ended up upgrading it so I can have a agent do that for me and just streamline the process and made it easier because I wasn't aware of how much they required me to put on the listing in order for it to go live. So if they're able to, simplify it, that would be great. AI will become a real estate matchmaker. So it will help them identify cities, town, neighborhoods, back and forth conversation. These tools will allow house hunters to find more homes with niche features. For instance, Redfin expects wellness features to become a defining feature of next year's high-end housing market. And yeah, I can see that happening. People going on Chat GPT, going on Google Gemini, and saying, "Okay, I want to move to the Midwest. What city can give me a medium house price of less than 400,000 with great schools and a lower cost of living? I'm looking for a 3 bedroom, 2 bedroom house. Find me this house." And they populate it and they give you a Zillow listing. They give you a Redfin listing. They give you a realtor listing. And then boom, there you go. So let me know what you all think of, Redfin's predictions for this year. To me, I think it's interesting. Um, I think it seems pretty, you know, it doesn't seem that out of the ordinary, right? It doesn't seem like, okay, this is way out there. There's no way this is going to happen. I can see all of these things happening. I would push the mortgage rates a little bit lower, and yeah, I see home prices remaining flat, even with lowering mortgage rates. But you never know, with the lowering of mortgage rates, once it averages into fives, if it goes down to the fives, you can see a boom of people just buying homes, investors buying homes. So that could possibly happen. But you just never know. You never know in this market. And so this is something to consider in real estate. So let me know you all's thoughts on affordability and home prices. Do you all see that coming to fruition? Mortgage rates going lower in the fives, averaging for 2026. Do you see home prices actually dropping in your area or nationwide? Let me know down below. All right, you all, make sure you all like, subscribe, comment down below, and I'll talk to you all later. Peace.